Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor. Great to have you here for a members only special. It's members only, not just members chat, but this time members only broadcast. So only members are seeing this, and we're doing 2 reviews this afternoon. Okay, and then we'll do more tomorrow, and we'll work our way down the list. So let me see how many people are with me. Let's see in the chat. We've got JJ 8ball. Welcome to you. Lovely to have you here. Standing on the moon. Diane Nagy, good afternoon. Is that Diane Nagy? I think I've pronounced that correctly. Hopefully you get to ASML today. No, it won't be today, I'm afraid. LEB, you did a $5 super chat, so it is at the bottom of the list, sadly. So there's about 10 more at least to go. We're doing 2 now. Thirsty Thursday. Is it time for a few beers? Steve Mariano, how you doing? And Chris Invest, good to have you here. Mike, hello. And Vaz, welcome to all of you. All right, I'm just making some slight adjustments. Let me do that. Okay, that's a bit better. All right. So let's... I'm actually experimenting with something at the moment because I spend a lot of my time at the desk. Under the desk, I've got like a motorized stepper, and you can't hear it. It's completely silent, and it's just going by itself, and my legs are going up and down like that. So while I'm sitting here, I'm actually moving. Rather than staying still, the muscles and the hips are moving, my legs and knees everything's moving. It's kind of cool, isn't it? So I'm just trying it out, seeing if I can do a show. Well, basically keep moving. But at the end of today's show, I'm doing a walk and talk as well. So, real walk. I've got some new shoes. I've ordered some ASIC trainers, sneakers, whatever you want to call them in America, and flipping heck. Don't you forget how worn out your shoes are until you buy a new pair. You go, oh my God, this is great. It actually makes you want to roll forward and, keep going. So really, really nice. So there you go. Walk and talk at the end of today's show. At the end of the show, we'll go to walk and talk. Yeah, 4:45. So anyway, under the desk, my legs are going up and down like that. On the little machine, you just plug it in. And it's kind of cool. It's kind of cool. Right, so it's not relaxing, though. It's not relaxing because you're sort of focusing on your legs moving, and you can't really not because they're just moving. It's kind of weird. Anyway, good day all. Hello, everyone. Hey up. Good evening, David Gerard. Good God, says Mike. Best investment ever is your health. I totally agree with that. Mike, rubbish. You need to move it. You need to move it. Need to move what? I am moving. What do you mean need to move it? Sit, walk and talk. Yeah, so I'm sitting, walking and talking. Yes, exactly. Yeah. Space up 5%, closer to squeeze. Yes, imagine now, just hypothetically, if I'd remained in at that position, Virgin Galactic, for every penny, it was $500. Do you remember what it was when I bought the 240 grand? Should we remind ourselves? They are, 140, 285. It was $500 every penny. So 285. That's 15. Let's do a quick calculation. 20 cents. So let's go and have a look at what that would have been if I'd stayed in. 20 cents. Sorry, no, that's not right, is it? It's 20. Oh, yes, it is. It's 20 cents. 20 cents times 500. I'd have put $100. That's wrong. $500 times 20. Yes. Yes, times 20. Oh my struth. 10 grand. If I'd stayed in and lived it through, I'd have been up 10 grand. Now, of course, if I'd have been in up 10 grand, I would have then sold that, obviously. I would have then paid 2.5 grand in tax because short-term capital gains. I was definitely going to be in my tax bracket then. I would have ended up with 8.5 grand. 8.5 grand I would have got. And I'd have had about 4 or 5 days of no sleep and stress and drama. Is it worth it? No, it's never worth it. But anyway, there you go. So that's what I've done. Anyway, investment. It is an investment. Ha ha. Push it. Real good. Good evening, Mahir. New Balance for the win, Martin. I don't like New Balance. I like ASICs. And I mean, you know, everyone's got their own choice, right? I like, remember, I run the marathon in ASICs. So obviously when you've done something like that, you think, I run the marathon. So I have ASICs now for overpronation. Or was it underpronation? Can never remember. They've got all that. So anyway, new trainers are good. We all live in a yellow submarine. You need to step it and move it. The thing is moving you on its own. It's just lazy. No, because I can't sit here doing a stepper while I'm working because you'd see me going like that. All this is doing is moving and getting the blood flow, moving the joints. I'm not trying to exercise my muscles. I'm just moving. So the joints are moving. The muscles are everything's flowing. It's not going to replace going for a walk, but rather than sit here still with my feet on the floor, I'm doing this. The hips are rolling. It's a good thing, right? Anyway, so there you go. It's scientific fact. Good evening, Martin. Just after 8 p.m. GNT time, hoping 500 times. Yeah, 20 grand. No, 10 grand. Yeah, it's $10,000. Yeah. Anyway, when and but doesn't count. You really kick yourself if it starts to squeeze. No, I won't. I absolutely won't because that would have been no. I'm an investor, and I mean, look, this is my actual portfolio. That's real money, no margin, no stress. I'm now earning 5%, 4% on my cash. Look, I've got 34 grand in cash. I'm not worried anymore. And look how quickly it goes up as well. $5.05. And the money only arrived today because I sold the shares. It took time. So the 34 grand is only in today. Look, $5.05, just doing nothing. I'm not chasing this. I'm already in. I think it's still going to sell back down. So that then I'll use my cash to buy back. Always a good time to do it after it's pumped. Don't do it when it pumps. Anyway. Sit, walk, talk, messing up calculations. Hi, Alex. How you doing? New Balance for me and Noble runners are great. It's like doing a mobility scooter and calling it... No, it's not. If you do a mobility scooter, you sit and do nothing. You get some fresh air, but you're sitting. I'm moving. If you could see, my legs are doing this, going up and down. I'm moving. But you can't hear it, you can't see it, but I can feel my hips moving. Yeah, it's definitely, and I can actually look. I can do that. I can do a little step if I want to like pace it out. But you see me. Look, if I don't start doing that, yeah. So this just allows me to move. Anyway, can we get on with it, please? Can we get on with it? All right. Who was it who requested Galaxy? It's the person that requested Galaxy in the chat because I've got 2 to do, and then I'm going for my walk and talk. So shut your gob. Let me get on with it. Who is it? You better off getting a standing desk. It would not work for this studio, I'm afraid. This whole setup would not work. It's just impossible. Standing desks are great for people that are just working at a desk on one screen, looking at one thing, typing a little bit. But the lighting, the setup in here, no, absolutely impossible. Never work. Brandon, me. He's going me. Don't forget me. I've been sitting here waiting for 3 days for you, mate. Can you bloody get on with it? I'll get on with it. Here you go. Should we get on with it? We'll do it now. We'll get on with it. Here we go. So. We are all set, mate. So, It is Galaxy 1413. 1413. Here we go. Time for another stock review. This time we are talking Galaxy Digital. What's it all about? Got a full review for you here so you can make an informed decision whether you should buy, hold, or sell this stock. Is this a stock you can make money on? Are you about to make some serious money? Or is it going to go the other way? We are talking AI. We're talking technology. We're talking crypto. Digital investments right now. Is this a stock you can make money on? Well, let's go over the numbers and show you. So I'm making a full production movie live for one of our members. This is Brendan, asked for GLXY. There he is in the chat. Give it to me, lay it on. So I'm going to show you the intrinsic valuation using our software. We're going to give you the operating income, who's buying, who's selling, the balance sheet, the margins, the profit, the loss. We're going to take a look at the website, the latest news. I've compiled it all for you. What's going on? Look at this, loads of information for you. I'm going to run it through my AI model. I'm going to show you the ratings. I'm also going to show you how it compares a back test to the S&P. All of that's coming in while I am, for the very first time, sitting here using a stepper under the desk to try and keep me moving. I've never done anything like it. It's pretty wild and crazy. Can you see me going up and down like that? No, you can't. I've done it very, very well. It takes a lot of practice, though. There you go. Smash the like button if you like this. This is being made live, but by the time you see it, it'll be the weekend. It'll be Saturday, and all day Saturday, there's reviews coming out, and this will trend on YouTube and Google and rank #1 for the stock. All our reviews do. Consider subscribing as well. You might like to subscribe to the channel. It's a very exciting time because anybody who is a subscriber, by the time we get to 100,000 subscribers, is in for a party. There you go, 88,547. 88888 is a lucky number. I'm hoping to do it live on the show. All right, so without further ado, let's go into it. We're going to start nice and simple, and we're going to get further and further down into the weeds as we go. So let's look at Galaxy over the long term. It's quite a new stock. As you can see, it first came out, when was this? 2025 in May. So it's just IPO'd. And it didn't even pop on IPO. It came down, went up a few days later, and then sold off. Typically, we get a pop on an IPO. We can't really call that much of a pop. Sold off. Very volatile, as you can see from its trading action since it's been out. Anyway, where do we go? Let's start off nice and simple. So we're going to start off with the basic information. Galaxy Digital Incorporated engages in digital assets and data center infrastructure, delivering solutions that accelerate progress in finance and artificial intelligence. It operates with the following segments: digital assets and data centers. The digital assets segment offers institutional access to trading, advisory, asset management, staking, self-custody, and tokenization technology. So it is a sector I like. I like crypto. I like AI. This is something I could be interested in, or perhaps just better owning, if you want crypto, own AI. Bitcoin. If you want AI, Nvidia, Microsoft, you could be done. But is this the way forward? The data centers segment competes with a range of infrastructure providers that are building or repurposing facilities to support the rapidly growing demand for AI and compute-intensive workloads. The company was founded by Michael Novogratz in 2018, headquartered in New York. The listed name is GLXY, Galaxy Digital. Okay, now then, if you'd like Michael on the show, we can certainly do that. We have a Meet the CEO series, and every CEO I've interviewed has always been done through you. It's the better way. We don't ring up and cold call someone and try and sell our services. No, they come via you. They come by request. They want to hear from you. They don't want to hear from me or someone trying to sell airtime. So we don't do it. If you are an investor in Galaxy, go onto their website, find investor relations, email them and tell them that you are an investor and that you care about the stock and would like to learn more from the CEO. We have a Meet the CEO series, and they will come back to you, I'm sure. Tell them that we often rank number 1 for the stock, and it's an open discussion, which always trends on YouTube and Google. So if you'd like to do that, that's how you do it. Employees 520, based out of New York. Let's look at the basic facts. Volume 2.68 today. The average volume is 6.83. We've got a 52-week high of 26 and a 52-week low of 689. Volatility. It's not making any money. It's losing money at the moment. Negative 772. That's why they went public, to raise money to be able to fund their business ventures. But at the moment, it's a negative PE. Analysts, we don't care what they say because they're paid to say it. I'm not. So we ignore that. Robinhood investors, I ignore that too. Retail investors, I like to see what you're doing, but I don't pay a great deal of attention to that because that's not the way I like to invest. I like to invest when I know what the business is worth and which institutions are buying it and what the insiders are doing it. So it's interesting to see. Not surprisingly though, because IPOs are very popular with retail investors. So you're all buying it, but that doesn't mean to say I want to buy it. In fact, I have just got out of the market in some respects because I've trimmed rather than buying the pump. I am simply out now, waiting for it to go back down again. So we don't see any information about institutions or insiders at all there, so we can't share that. Who else is buying this? No surprise, Robinhood. Doesn't surprise me at all. Circle, Big Bear, Archer, Applied Digital, MicroStrategy. So we see a lot of volatile stocks here. Hims and Hers, no real value there anymore. Their business is kind of seen a better day. Rocket Lab. So Bit Digital, Oklo, interesting. Rigetti, Nebius, Coinbase. Yeah, all your favorites. No real big, not any real blue chips. Nothing old school like Coca-Cola and J&J. All modern, all new stuff. So you know that the stock is going to be volatile by knowing who owns the stock. That's why I share that on the screen. Right, let's start by going into the business numbers. So tap the like button if you like this and consider subscribing as well. And leave a comment below and I answer all my members' comments. This is being made during a members only live stream. So you never saw me make this one. All right, let's go into it. And what do we got? Now we're going to start with the intrinsic valuation. Very, very important place to start. This gives us a basic value of the business. The price is not the value of the business. That's just the price people are prepared to pay on the day. So GLXY, intrinsic value, overvalued by 39% on the base case. On the best case, we are undervalued by 36%, and the worst case, we're overvalued by 89%. So it's an expensive stock from the basis of the intrinsic valuation, and everything is calculated here correctly. We have all the information. We don't always. This one we do. So that is a reliable, as we can be, valuation. It's expensive. There was a better time to buy it. Maybe not today. Valuation, 39% overvaluation. Okay. This is typical, though, of an IPO. It's even though it's sold off, it's a lot better than it perhaps should be worth. All right, let's scroll down here. Look at the revenue. Oh my gosh, 13.0 billion revenue, and this is where we are today. But estimate go down, and then we've got nothing really. Very slow. So the estimates of future revenue don't look good at the moment. The operating income, there's a lot missing here. This is in 2020 when they weren't public. So we have some empty areas here. We have from 25, March 30 of 25, very limited. But we are expecting to see operating income go up in 2027. That's 2 years away, always worth thinking about. Net income right now, we are negative 326 million and expecting that to increase dramatically over the next 2 years. A bit of an S-curve here if our estimates are correct. Free cash flow is 61 million, operating cash flow 152.7 million, and EPS is negative of 0.94. Scrolling on down, what about the assets? 1.1 billion in assets. 1.8 million is in cash. Nice. I like that. We want them to have cash, but we don't like businesses that are all out cash, because they're just basically a cash pot, and you could put your own money in the bank and earning 4% interest. You don't need to invest in somebody who just owns cash. We see that a lot with businesses. They'll open them up and just have nothing, no business, no assets, a pile of cash, and people will invest in it. And I've never understood why. It's crazy. Anyway, we have some cash, but essentially we are assets. We have assets of value, and hopefully assets are not liabilities, and they'll go up in value alongside our cash. Liabilities, 98 million. 98 million of liabilities. We're not showing any long-term debt or anything like that. It makes up 55% of the liabilities, whereas other current liabilities is 44%. So their balance sheet doesn't look that healthy. Doesn't have any long-term debt, but I wouldn't have thought the balance sheet would look too good. Let's scrolling on down, and gross margin. It's very early days, of course. It's a newly public business, but been around a while before that. What was the date on it when it founded? Does it tell me when the business was founded? Normally it does. Lacking that information, because of course when it IPO'd wasn't when it was founded. I'm sure I saw it somewhere. I read it somewhere, didn't I? There we go, 2018. So 2018, this stock has been around, this business has been around since 2018. So it's not a new business, and that worries me a little bit. So I don't like that. 2018, we've been around. We went public to raise funds, but 2018, let me come back to here, and we've only got gross margins of 1% in AI and digital. That's not good. I wouldn't have thought. Anyway, negative 1.1% net margin down. It's been around like 7 years, and you IPO when you want to raise funds, not when you want to build the business. It's been going a long time. So anyway, that's a bit of a concern, down 2.5. ROCE is negative 14%. Now, if you don't know what these are, you can just hover over the box and it will give you definition. You're going, well, how do we do that? We're watching it on the telly. Well, easy. Here's the Alpha Spread software in the chat. For those watching later, it will be below in the description, and you can go and check that out yourself and get a free trial, or as it turns out, Alpha Spread, you can get a plan so good it makes my membership for free. It's that good. Go and check it out. I know the CEO, and I've got you a really good deal. ROE negative 34%. So this isn't looking good so far. Nothing too good here. Let's have a look here. Profitability is 30. It's low, and it's low for the sector as well. Digital AI. It's not something that looks great. They're not making a lot of money. 65%. So it's not going to go bust anytime soon. It's not a terrible balance sheet, but it's not great either. And considering it's new and it's new to IPO, they should be a little bit cash rich right now. They just IPO to make some money, and they're only 65% solvent. So that's not good either. I told you it wouldn't be great. It's okay, but it's not great. A 3% downside, worst case scenario. Now, this is where it gets a bit better for you. 3% downside, worst case scenario. So you could, if you were allocating funds to this, you could say, all right, I've got $1,000 I want to buy. I'll put 800 in, and I'll leave 20% out, 200. And when it goes down a little bit, 3 or 4%, I can buy, and then you've got that worst case scenario built in. You can lower your average. Maybe that would be your strategy if you like this. Here's the good news. On average, the upside is 36%, 12, 24, 36, 3 times the S&P 500 and some change. So that's quite good. Well, very good. What about the best forecast? 60% upside if all things go well. Well, interest rates are going to come down. AI is going up. Crypto is going up. Digital information, all of this sector is going up. So you could be looking at the average of 36%. So far, if you like the sector, it could be interesting. It's got reasonable profits. When I say profits, it's got a reasonable margin, not it's not making a good net margin at all at the moment, but it's making some money. It's bringing some money in. Solvency, it's not going to go bust, so you can buy it, not worried that it's going to be gone tomorrow. But if you like the sector, this could be interesting for you if you are patient and you are looking to hold out for a couple of years to get a or some kind of return on your money. Because the projections were looking 25, 27. Maybe it could be a sector that you could invest in. All right, let's move on. So by now, I'd like to ask you to tap the like button. Thank you very much indeed. New subscriber, CC, thank you. And click subscribe as well. That would be awesome. Right, let's go on to the website just to get a bit of a flavor of the business so we can understand a bit more about it. Helping the world invest, build and transform relentlessly. That's what this business is all about. Digital assets and data center leader. 7 billion assets on platform as of March 31st. Of course, that changes. We are now in July. 1.3K plus institutional trading counterparties, making Galaxy one of the world's leading liquidity providers in the digital asset space. 800 milliwatts, is that milliwatts? Total average capacity of a Galaxy's data set? Yes. Megawatts, not milliwatts, 800 megawatts. Average loan book size, 874 million. All right, lovely. Institutional investors. Let's see who's buying this. Trading, institutional investors. Oh, it doesn't give us a name. The most sophisticated. Oh, I see. Okay. Trading firms, hedge funds, bank. Oh, these are its partners and customers. Okay. I thought that was its investors there for a moment. Anyway, just give you a flavor of the website. Now then, let's go and look at some latest news before we get on to the AI model. So this is the most recent information. Crypto-linked stocks climb with Bitcoin after Israel and Iran ceasefire. That's good. We might even get an improvement on this in the coming weeks because it does look like Gaza and Israel are moving towards a ceasefire. Now, you might ask, why does that matter? Well, if you followed my show and done the research, you will know that a lot of AI and technology, stuff like that, data centers, come out of Israel. So it's always a good catalyst. And we've got Trump saying in the next week or two, we could have a ceasefire, a permanent one. This was obviously something that was back in June. Since then, things haven't gone quite as well. So you can see that the stock will rise on this news, and we're more likely to see more of that in the coming days. So we like that, don't we? Crypto-linked stocks rose on Tuesday, pre-market, trading along with Bitcoin as broader markets maintained gains after the ceasefire between Israel and Iran appeared to falter. That's interesting. They're talking about the faltering. Anyway, this is a transient situation, and we're going to get more resolution on that in the next week or two. The crypto space is also buoyed by optimism over stablecoin legislation. This was a few days ago, remember. Things are progressing there through Congress and recently announced stablecoin partnerships, bringing in more traditional finance companies into the arena. Early on Tuesday. Fiserv and MasterCard adoption deal. Bitcoin. We won't talk about Bitcoin because it's rallied and hit an all-time high today. So we're going to leave that one there. So let me just get rid of that story. Move on to the next thing. Galaxy Digital prize upsize stock offering. Shares were down. Now, this was back in March. I wanted to bring this into the report because I thought it was important to see how things react on certain news items. So Galaxy Digital priced an upsize underwritten public offering of 31.6 million shares at $19 each. The offering includes 26.4 million shares from Galaxy, 5.2 million from existing shareholders. Underwriters have a 30-day option to purchase up to 4.74 million additional secondary shares. Net proceeds will be used to purchase LP units from Galaxy Digital Holdings LP. Funds will support AI and high-performance computing expansion as its Helios data center in West Texas. Galaxy will not receive proceeds from shares sold by existing shareholders. The offering is expected to close on June 3rd. All right. Now, if we go back to our year to date, we can see that it IPO'd in May. So you can draw your let me just look back here. I'll show you. It IPO'd in May, on May the 16th. So you can see how that correlates to what I've just given you. This was May the 30th. So I just wanted to bring that into context, that bit of news. Now, we're now going to get into our latest news, and then we got our AI model and how that stacks up. Galaxy Digital works with Fireblocks to expand institutional crypto staking. Mike Novogratz, Galaxy Digital, said on Wednesday, now this was just yesterday, this is brand new news, said Wednesday it has integrated with digital assets and payments infrastructure platform Fireblocks to expand access to its crypto staking services for financial institutions. Now, this is certainly something we are interested in, and this is going to become mainstream very shortly. Now, Fireblocks institutional clients can use Galaxy's services to make digital assets directly from their vaults without moving assets off platform. Institutions use Fireblocks to securely manage their digital assets. Staking occurs when investors lock up their crypto to help run a blockchain network and earn rewards in return. The Fireblocks integration represents a significant step forward in Galaxy's mission to make secure and digital efficient staking available, where institutions custody their digital assets, said Zane Gluber, head of blockchain infrastructure at Galaxy. The partnership marks the third custodial integration on Galaxy's blockchain infrastructure team has announced this year. It noted following its collaborations with Zodia Custody and BitGo earlier in 2025. Okay. That'll do from there. We're now going to go on to our grades now, and we can see that we're giving this a buy from Seeking Alpha. Analysts, that is. Wall Street are giving it a strong buy. They like it. Quant, the AI unemotional software, is saying a hold. Not buying at these levels, but we're not selling it either. The valuation is C+. Actually, then, that's not too bad. It's not bad. It could be an F after an IPO. C+, since it sold off after the IPO. Let's just remind ourselves of where we are. Let's go back and have a quick look. So the valuation doesn't look too bad for a growth stock. It's expensive, but it should be. But it is a growth stock, remember that, and it's early days. So it has sold off. But our valuation, we're giving it at the moment a C+. So that's not too bad. Could have been a lot lower. Could have been an F. Growth, A+. We like that. Profitability, C. That's only going to improve. Momentum, A+. Revisions, B-. Of course, it's new. In 3 months, we'll have more information. But right now, that doesn't look too bad. It might be a bit expensive, but it's not too bad. Short interest, 5.25. Not very much short interest at all. So there isn't no short squeeze coming. All right, so just bear that in mind. There's no point doing a back test, because if I do a back test against the S&P, you put 10 grand in digital holdings, you've now got 12. Over the same period, you put 10, you got 10. It's outperformed the S&P over a couple of weeks, but it really isn't worth mentioning. So why did I mention it? Good point. Let's come on to the final part, our analysis, how it compares to other companies, what's unique about it, and our final thoughts on it. So please tap the like button if you like this, and consider subscribing as well as we break down now using our software for our final part of our analysis. Now, so far you've been watching Alpha Spread, but here is Seeking Alpha. Seeking Alpha, it's in the chat. It'll also be below in the video and description and in the comments. You can pay thousands of dollars for the premium pro plans, which I have. You can, however, you can access it for free trials, discounts with my referral. You want to at least try it and see if it benefits you in any way. I think you'll be very impressed with what you get from Seeking Alpha. let's go into it. Company description. We don't need to do that. We've already explained what the company is. If you want to pause it there, you can. What about the competitors and unique value? So Galaxy Digital faces competition from both traditional financial services companies and specialized crypto firms. Competitors include Coinbase, MicroStrategy, Riot Platforms. These would be its competitors. We all know about Coinbase, we know about MicroStrategy, and we know about Riot Platforms. You can pause it there and read that if you want to. So what makes Galaxy Digital so unique? Galaxy Digital's unique value proposition lies in its comprehensive approach to digital assets, combining financial services with infrastructure solutions. The Helios data centers shift to AI services offer a high margin opportunity that diversifies its revenue base and reduces reliance on cryptocurrency price volatility. I like that. Positioning the company advantageously for long-term growth. Galaxy is a rated of hold. The valuation landscape shows a mix of positive and negative indicators with strong growth and momentum metrics. The company's profitability is moderate and revisions indicate a stable outlook. So let's go through it. It doesn't look too bad, does it? Galaxy represents a mixed valuation picture. The EV sales and price sales ratio are significantly lower than the sector median, indicating the stock is undervalued. However, the PE ratio of 36, considerably higher than the sector median of 13, suggests an expensive valuation. There's always two sides to every story. GLXY demonstrates exceptional growth with forward revenue growth projected at 371%, vastly outperforming the sector median of 6%. This highlights the company's strong expansion and robust financial performance. Profitability shows moderate profitability. Its return on total assets is 7%, substantially above the sector's range of 1%, indicating efficient asset utilization. However, cash from operations is significantly negative compared to the sector, reflecting challenges in operational cash generation. That's why I spoke about the balance sheet. Momentum. The stock's momentum is outstanding with a one-year price performance of 87%, far exceeding the sector median of 20%. This indicates strong investor confidence and bullish sentiment towards GLXY. No surprise, we've just been through an IPO. It might be down right now, but overall the business is probably up where it was when it was private. Revisions. In the last 3 months, there has been an upward revenue revision and no downward revision, suggesting a stable outlook for future earnings. In summary, GLXY exhibits strong growth and excellent momentum, which are balanced by a mixed valuation and moderate profitability. Given these factors, the stock is rated hold, indicating it is expected to perform in line with its peers, with its sector peers. So there we go. Let's wrap this up. Tap the like button if you like this and consider subscribing if you'd like to know more about our channel. This is a sector I like. There's no doubt about it. We all know now that crypto is the way forward. Digital finance is the way forward. AI is the way forward. The company you can invest in knowing it's not going to go bust anytime soon, in my opinion. Doesn't have the greatest balance sheet, but not the worst either. It's outperforming in many of the metrics. It's potentially doing well. Overall, the revisions are good, momentum's good, profitability's okay. Overall, I would say this is a one for further discussion. It could be one for you. Like I would like to say, if you were investing $1,000 and you put 800 in, I would keep 200 back for a little bit of a dip, buy a bit of a dip, doesn't really matter what it is, just to lower your average, and then leave it alone. This is one I don't think I'd want to trade. I would want to own, potentially, but I'd like to cover the earnings calls, and if you would want that, let me know, and I will cover it for you. Okay, there we go. That's my thoughts. So what would you like to say about that, Brandon? Did you like it? Was it something that was of interest to you? I hope I did you good service for your super chats. Thank you so much indeed. Click above my head for all the links down below in the description. Over here, I shall put my full playlist of all the analysis I've done. I've done hundreds of stocks in the Alpha Spread playlist. Down here, I shall create a new playlist for Galaxy. So should I have more news on it? Should we cover it more? We have charts from Sensei. Join Sensei, of course, every morning, and he'll do a chart for you if you are a member, and you can add that into the playlist. It'll be very interesting. And if we do earnings calls, which you could request for $5, we could cover the earnings and we could go from there. But there you go. There's my first introductory look at Galaxy Digital. Until next time, as always, take care of yourselves and each other. All right. What's next? We're doing Orly next. ORLY. Orly. Didn't this... no. It couldn't have done. Sensei, there is the IPO there. It's been around for a while. Not decades, 2018, but not decades ago. Decades ago, we didn't even have digital currency. What are you on about, Sensei? O'Reilly. Okay. I've seen the adverts for this. I've seen the adverts. Okay, there we go. O'Reilly. Let's select the next stuff. Bit of Ireland for you now. O'Reilly Auto Parts. Let's see what we can find on this bad boy. So this is a members only live stream. That means only members can view the stream as well, not just chat. ORLY. Let's have a look. What do we have this time? Just lining it up. O'Reilly. Don't need that. Dee. I don't need that. Duplicate that. How long has this one been around for? Ooh, blimey. Ooh, hell. That's a bloody brilliant chart. Wow. That's a brilliant chart. Look at that. Hell. That's like the perfect chart, isn't it? I'll be interested to see Sensei do an analysis on this, chart review on this one. It's like a perfect, like the perfect chart. Just all straight up, all just no down. That'd be interesting. I'd love your thoughts on that. I mean, that's just gonna, yeah. Wow, I'm impressed with that. You don't often see, how often do you see a chart like that? Who requested this one? Who requested O'Reilly? Please, if you don't mind saying. O-R-L-Y. Was it Donda Donda? Right. I think I've got everything I need. All right. Okay. Yes, it was you. It's interesting, this, isn't it? Flipping heck. Very, very interesting. All right. Very, very interesting. Yes. Right. Let's do the next one then. Let's do it. Are you ready? O-R-L-Y. And it's 1450. 14. We're not going to ring the bell because we're doing Members Day. We're doing all this stuff. We're doing all this stuff. And when we do stuff, we don't ring the bells. We do stuff instead. Okay. Okay. It is Irish. You got to give me that. Okay. Okay, here we go. So, time for another stock review. This time, a bit of an Irish feel. O'Reilly. O'Reilly Auto Parts. We're going to cover O'Reilly Auto Parts now in our review. I got family in Ireland, so I just couldn't resist the bit of Irish music there. I hope you can bear with me just for those couple of seconds. But we're talking car parts today, and parts that go on a car, parts that go in a car, under a car, above a car. Just about every kind of part you could possibly imagine. Can you make money on this stock? Well, I'm going to say to you, but perhaps it's the best chart you've ever seen. Or is it about to crash? When you see a chart like this, you think to yourself, well, can it go up forever? Well, let's go down in the city. Take a look. Let's look at the numbers. With all the trade wars going on, does this stock actually make sense? Well, let's look at it. Let's go through it. How's inflation affecting this stock? We're about to find out. Look at that chart. Have you ever seen a chart like that? I mean, literally, of all the charts in the world, that has to be the best chart I have ever seen. Just a perfect round straight up into the future. What we like to call an S-curve. You don't ever see that in a chart. I've never seen a chart like that. That's the first time, and I've been doing this for 4 years. So is it all about to come crashing down? I don't know. It looks pretty good though, doesn't it? Anyway, valuation. How does it value? 46% times over earnings. We're going to cover all of that. We're going to go through the balance sheet, who owns it, who's selling it, what the profit's like. All of that will be covered in this review. I'm also going to have a quick glance at the website. You've all seen O'Reilly's all over the place. We've all seen them. I've got some latest news. In fact, that's not latest news, actually, but I wanted to share it with you. It's important. And I've got the full AI model, interesting, and the price of it right now, the short interest, who's buying it, who's selling it, and how, of course, it compares to the S&P 500, and a look at the chart as well. Looking nice. If I go to the 5-year, I mean, look at it. Have you ever seen a chart as good as that? I'd love Sensei's opinion. That looks like the best chart ever. Anyway, I'm like a bit surprised by it. I mean, it looks just crazily good, doesn't it? Anyway, let's see what we shall find. We're going to start nice and simple. Tap the like button, consider subscribing. I promise I won't play any more Irish music in the middle of my review. Having said that, I can do what I like. It's my show. I might just do it again. Right, let's go back to the day position and start from the beginning. I'm sure you all know what the stock is, but we should probably look at it anyway. It is a review. O'Reilly Automotive owns and operates retail outlets in the United States. It engages in the distribution and retailing of automotive aftermarket parts, tools, supplies, equipment, and accessories in the United States, serving both professional installers and do-it-yourself customers. Bit like me. It provides new and remanufactured automotive hard parts. I've actually been in an O'Reilly. I've been in one. I bought some stuff from one. Few bits and bobs, maybe a sponge and a bucket. Water pumps, brake system components, batteries, belts, hoses, temperature controls. Yeah, we're not going to read all of that lot. Oh my gosh, how many? Yeah, okay, we get the idea. You've got lots of parts and bits and bobs in your shop. We're going to skip that. We're going to come to the end. The company was founded by Charles F. O'Reilly and Charles H. O'Reilly in 1957. Love it. Two Irish boys by the sound of things, and it's been around for a long, long time. We do like that. The listed name of all these is O'Reilly Automotive, and that's good. Brad W. Beckham. That's David Beckham's brother. No, it's not. Might be. I've no idea. Been around since 1957. Headquarters in Missouri. Great. 93,000 employees. Great. So far, I'm liking what I'm seeing. I mean, what is there not to like so far? 3 million in volume. Average volume is 5. So very low volume. People buy it. Own it. It's an owning stock. It's a business you own. I like it. We've got a market cap of 78.9 billion. Remember, the market cap is the price of the stock. It's not the value of the business. It's the market cap, the shares outstanding, what they're worth. Price to earnings ratio, 34 times earnings. It's expensive. Does it deserve that expensive price? I don't know. Maybe it does. Maybe it doesn't. Analysts say, yep, we're buying it. No one's selling it, or we're holding it. I don't like to look at what analysts say because they're paid to say it. I do it for free. The aftermarket auto parts industry is still highly fragmented, giving O'Reilly ample opportunity to leverage. That's the bulls. The bears are saying O'Reilly plans to expand in Mexico offers some uncertainty as the retailer's presence is still nascent and its reliable brand name may not translate internationally. Okay, that's always true, but I think you're kind of clutching at something. But anyway, Robinhood investors, don't pay too much of attention to that. I'm a retail investor. I'm on Robinhood. Would you want to know what I'm buying and selling? Probably not. It's not going to influence anything. But you can see a bit of both. Hedge funds. What are hedge funds doing with this? Well, they've been buying and trimming off. Recently, buying in and taking some profits. But buying back, that's interesting. They're just constantly buying and trimming a little bit. There's nothing too wrong with that. Have we got any inside action? Yes, we do. Insiders, they're doing nothing. That's very small positions. That's the uninformative buys. So in other words, it's tax positions. They're not doing anything. They're not buying or selling. They're just actively trimming along the journey. That looks very healthy. So far, everything I see looks good. I like it. Let's look at the earnings. The earnings has missed on expectations by the looks of things. The expectations is very high. It would be for the price. They are earning money, but they are in decline. Interesting. The stock price just keeps going up, but the earnings is in steady decline. It has to be said. Missing on earnings, coming down. The estimate for Q2 of 25 is negative. The company to lose money. That's probably because they're investing in Mexico. That could be the reason. That's nothing wrong with that. That can be a one-time hit, and then we see greater progress going forward. So that's not a major problem. Now then, I think that this would be worth covering. July the 23rd. If anyone does a super chat for this, I will cover the earnings for you on July 23rd. It's only next week. You might like me to cover this for you. So if you are a member and you do a minimum $5 super chat, I can cover the earnings. First come, first serve. I do 2 a day, 2 in the morning and 2 in the evening, 4 a day. And once the spot is booked, it's booked. Who else buys it? I like that. Costco, Walmart, AutoZone, Broadcom, Home Depot, Chipotle, Netflix, Visa. I like it. Berkshire Hathaway, Amazon. Oh, I like this. Like, Coca-Cola. Hello, Google. It's being bought by old school money, real money, money that just buys and owns. That's why the stock is constantly going up, because it's bought by people who buy and hold. So far, I like what I'm seeing. Okay. Let's go now into in more detail. Please tap the like button and consider subscribing. The bell is about to go live on the show, so we'll just pay note of it. There you go. I'm not buying this now. I'm in, but I'm up like $100 a share on my VOO. I've trimmed from the top, and I'm not buying this little rally. It's not even a rally. It's a little ripple on the pond. Everyone's getting FOMO. I already made my money at the bottom of the market. Let's ring the bell on this review in 3, 2, 1. The bell has now gone. Oh! Oh! Is that right? No, it's not. That's why I just waited to see. That was Robinhood doing some things that Robinhood does. I was waiting, because if that had gone down like that, I would have bought that. Gotta wait. That wasn't real. Okay, let's move on. That was a bit of excitement, wasn't it? Anyway, Robinhood does that a lot. Okay, so we've got... try and ring them up, by the way, and say, I want to buy that price. Try and have that conversation. Overvalued 46%. Now, it's a growth stock. I can pay 25%. There's nothing new and innovative here. It's car parts, right? It's not like a Tesla or a cars or, flying cars, EVTOLs. It's not AI. It's not anything with a super high future valuation. So that's a bit rich for me, 46%. I wouldn't buy that. Best case, with rates coming down, more people buying cars. But having said that, if the rates come down, more people buy new cars that don't need to buy parts. Yeah, they might want to buy a brush and a vacuum and a bucket and a sponge. If you buy a new car, we all do it, don't we? We go out and buy the manual and never even lift up the bonnet, or the hood, as you call it. Who knows? I don't know. But it's a bit expensive for me. But worst case scenario, it's 58% overvalued. So that's the intrinsic valuation. It's expensive. So anyway, let's move on down. Let's go through and see. Now then, we've got 1%. You see growth. It's steady as you go. I think it's a bit rich. It's a good business, and you can buy and own it, and 20 years you'll be up, and there's nothing wrong with that. Old school money, and you can tell it's old school money by what was in that list. People that own Coca-Cola with money, buy this, leave it for 20 years and just have a nice passive income. I totally get that. I totally get that. Did it pay a dividend? I don't think I saw a dividend, actually. I think I searched for it and didn't see one. Let me just do that again. ORLY. I'm doing this live. I didn't see a dividend. I'll try again. No, there's no dividend. They're not paying a dividend. I didn't think they were. But that often comes with a stock like this. But anyway, there's no real growth. It's steady as you go. But that's good. You own a good business. People with money like to own great businesses that grow over time. Their money is safe. They just see their money going up over time. There's nothing wrong with that. There's nothing at all wrong with that. Net income, just flat. Free cash flow, 1%. Operating cash flow, 2%. EPS, 1%. These are estimates. They don't mean this is to do with Mexico. So, has the stock recently sold off, or will it sell off? No. I'd be waiting to see what would happen with their Mexico venture. It's gone sideways a little bit the last few months, but still trending upwards, though, relatively healthy. I wouldn't be buying it now, I don't think. Anyway, let's continue our review. I've lost my button. Where's my button gone? There we go. So let's scroll on down. Look at the assets. 15.3 billion in assets, 191 million in cash. Good balance of that. Long-term investment, 60 million. Nice. Good assets there. So that looks okay. What about their liabilities? Long-term debt, 5 billion. Got a bit of long-term debt, no short-term debt. Long-term debt, 5.7 billion. So their liabilities outweighs their assets. Not good. They've got 5.7 billion. That's because they're probably spending money in Mexico to build out their business. So if you believe it's going to go well, that's what the bears are saying. It has some issue. But if it goes well, I don't see why it wouldn't. But then, look, with all the tariffs, with Trump and everything else, Mexico, it's an unknown, isn't it? I wouldn't be buying. I've already decided. I wouldn't be buying this. I'd be owning it. And with that flipping gain you've had, just hold it and you're fine. But I wouldn't be buying it right now. The long-term debt is 5.7 billion. Let's have a look at that on the liabilities. 33% of its liabilities are debt. Now, of course, when interest rates come down, that's a catalyst for the stock. So what this is about is interest rates coming down, catalyst for the stock. But how will it go in Mexico? Again, I wouldn't be buying this. I'd be leaving it alone if I was already in. Gross margin 51%, but we're interested in net margins. Very nice indeed. I think that's a good margin in this space. I'm guessing it is from experience. You're basically a retailer selling stuff, and you're not a AI software company. You're not Apple. But you know what? 14%. I bet it's good. Now, if you don't know how good that is, you can compare this to the competition. This is my alpha spread. So there's alpha spread. If you go into alpha spread, you can get a really good deal, which is so good, it makes my membership for free. And with that, you can see how it compares to the competition. I see we got Tim Rogers in the show. If you stick with me to the end, I'm going to open up the phone line after my review, and I'd love to talk to you. I've got a few things I want to ask you. I'd like your opinion on them. So tune in at the end. It'll be about 5 minutes. FCF margin 12.1%, ROCE. If you want definitions of this, it's on the software that I've just given you the link for in the chat and below in the description. Okay, moving on down. Profitability, see, 52. It's okay, nothing major. It's not an AI software, but 52%. It does make some money. Interesting that. But I bet it's been declining though. The solvency, see, that debt is an issue. But again, you can buy it. It's not going anywhere. It's been around for years. It's a solid staple. It's not going anywhere. You can buy it without any worry. The business isn't going bust, in my opinion. It's 60%. It's a good number. So don't worry about that. Now then, worst case scenario. You see, it's expensive. 32% downside. Worst case scenario. 8% on average. 8%. Why risk it? I would wait until after Mexico. 8%, you just buy the S&P. 21%, well, you can get 35% on the S&P if you bought it properly, as I have done. So I wouldn't be buying it now. Every reason to say, I like it, look at it, pay attention, but don't buy it now. In my humble opinion, and as Dan Penner would say, there's nothing humble about me. I do like Dan Penner. He makes me laugh. I couldn't have him on the show. He would get banned for all the swearing. Anyway, here we go. It's F this and F that. I mean, literally every single word is F this. It's crazy. O'Reilly Parts. I'm not going to go too much onto this. We all know what an auto parts website looks like. It's clean. It's tidy. It sells turtle wax. Oh, yes. It sells Lucas Power Steering Fluid. Now I'm buying it. I'm going all in. Lucas Power Steering Fluid. It's a no-brainer. It's a buy from me. Absolutely right. Okay. Now, this was back in April. Signals a 2 to 4% comparable store sales growth target for 2025. I just wanted to share that. I know it's back in April, but it was a projection for 2025, so I wanted to share it. From their earnings call, all right? I thought it was worth sharing. So this was what they said in their earnings. So should we just share this with you? Oops, Daisy. What am I doing here? Oops. I just thought I broke something under my desk. I've got a little gadget, and I thought I'd done something wrong. CEO David Beckham, that's just a joke, highlighted the company's strong start to 2025 with comparable store sales growth of 3.6%, driven primarily by mid-single-digit growth in the professional segment. DIY sales showed slow growth, digit growth. Slow growth. It doesn't support this high price, in my opinion, to buy now. Finally, we're going to give you, look at this, the valuation is D-, it's down from F. So it's up from F, I beg your pardon. Valuation is better than it was 3 months ago. Growth is C-, the same. Profitability is A, down from A+. Momentum is B, down from A. And revisions is C+, up from C-. Not a great deal there, but the valuation would suggest it's getting better value than it was. 1.59% short interest. No real short interest here to be concerned about. Okay, so far, not so bad. Let me give you my AI model, and then we are done. Tap the like button and consider subscribing. I'm going to open up the phone line. If you want to start calling in, everybody, I'm going to do a brief phone in. I'd love to talk to Tim Rogers. I've got something to ask him. There is the link in the chat. Get ready. We've got Walk and Talk coming up in an hour or so. There is the link for everybody who wants to call in. O'Reilly, we're not going to go over the company description. There it is, just down there. We've already covered it. AutoZone and Genuine Parts, these are the competitors, all right? Now, what makes O'Reilly's unique value proposition? What is it? Well, it lies in its expansive distribution network, which includes 31 distribution centers, allowing for efficient inventory turnover and superior customer service. The company excels in the professional segment, offering a lower margin yet more stable and less economically sensitive revenue stream compared to the DIY segment. O'Reilly's strength is further bolstered by its proprietary brand portfolio, contributing to more than 50% of its revenue, thereby enabling better margin control and flexibility in sourcing. I like it. Very, very good. Does make sense. If your proprietary brand portfolio, that's where the money is, totally. We've already covered the revisions headlines, but I will lay them out again. Valuation, Ollie's valuation is significantly stretched. The price to sales ratio of 5 is notably higher than the sector median of 4, indicating the stock might be overpriced compared to its peers. It is. Despite some strong growth metrics like EPS growth of 9% forward, that is better than the sector's 6%. Overall growth is mixed. Revenue growth is projected at 6%, above the sector's 3%, highlighting some positive momentum. Profitability, both superior profitability with a net income margin of 14% compared to the sector's 4%. The company shows efficient profit conversion from sales and momentum. Orly demonstrates strong momentum with a one-year price performance of 34%, significantly outperforming the sector median. This reflects bullish sentiment and strong investor confidence. We've got earnings revisions are negative with 20 downward EPS revisions in the past 3 months compared to only 7 upward, suggesting analysts are less optimistic about Orly's future earnings. Okay, in summary, O'Reilly Automotive shows strong profitability and momentum, which are offset by its overvaluation and negative earnings revisions. The mix of these elements results in a hold rating, indicating it may perform in line with its sectors. If we go back to the chart here, and we look at the lagging PE is 34 times earnings. I'm going to compare that with our forward PE, which is 31 times earnings, which is just there. Worth noting that going forward, it's 31 times earnings. So that's why the valuation has improved. Make sense? I hope that makes sense. Good to show you that at the end there. There you go. There's my thoughts on O'Reilly Auto Parts. It's a solid business. It has a good balance sheet, but not great. It's spending money in Mexico. I don't know how that's going to go. Nobody does. The bears are concerned. You should be concerned. We don't know what's going to happen with any of those plays with tariffs and everything really. We don't know. I don't know if how Trump will like that, but they're only expanding into Mexico. It's still an American business, right? They just want to do business in Mexico. Kind of makes sense, really. Bringing money back to America. Why not? They're proprietary owned brands. They're American. So he might like that. But I don't know. It's very expensive at the moment, but the valuation is improving because the business is growing. That's why the stock is up. Makes sense. It's a good sector to own. It's not a trading stock. You buy it and own it and have growth over time. I don't see any reason why growth would not continue, but I'd be waiting for a pullback. As I am now, I've taken a lot of I've taken 33 grand off the top of my portfolio. This is my portfolio. You can see it going back down. You see, I'm not rushing to buy. I've got 34 grand in cash. I've got 251,000. I'm a quarter of a millionaire now. Can't believe it. All from 5 grand. Look at me, a quarter of a millionaire. I love it. And I'm waiting for a pullback. I've got no margin. I'm earning 4% on cash. I am very, very happy. So is it a buy from me? I don't think, in my opinion, it's a buy right now, but I would certainly be keeping it on my radar, waiting for a pullback, and then I could buy this and own it. There you go. Click above my head for all the links down below in the description. Over here, I should put the full Alpha Spread playlist of all the hundreds of stocks I've reviewed. Down here, I will open up a playlist if I haven't already got one for O'Reilly down here. So any earnings, future updates, if sends it as a chart, it'll all be in that playlist so you can have much more information going forward. There you go. O'Reilly, thank you very much indeed for the request. And that's it from me. Until next time, as always, take care of yourselves and each other. All right, what a day, what a day. Friday, it's the phone in. I don't know if Tim's still here. I wanted to see what Tim thought about something. Tim Rogers, are you here? Are you here? We're gonna have a phone in for 10 minutes. There is the phone in. Click on the link, call in, be on the show. It's members only, so it's only viewable by my members. I don't think we've ever done a phone-in on a members only before. So for those of you waiting for the next video in the training series, it's on its way. So we've got 208 members now enjoying the training series. If you want it, it's free. It's included free in our server now. Here is Discord. There are a series of videos which are all there. There's a Discord link. When you click on it, don't join the server. Don't do it. All right. Well, hang on a minute. What do you mean don't do it? Premium subscribers only. If you join this, you don't see anything. You just see another page going, well, you need to join. You see nothing. Don't do it. The scammers do it. All right. But we have to have it there because it's just silly, really. We have to have it there. Don't know why. Purchase for $2.99. That's the price of our Discord server. Otherwise, I can't provide this service and monitor it and run it for nothing. It takes up a few hours of my day every day. So I can't do it for free. That's why it's $2.99. But now for free, we give you the training course included in this. So it's very, very good value. I think you'll agree. We've got 208 members who are enjoying it. And the next one will be out very shortly. And you get one-on-one service. So, I mean, and it's the only way you can message me. All right, don't do emails. Don't do nothing like that. Text, phone calls. You just message me through Discord. All right, so there is that. I want to thank everybody. Our subscribers are just, well, what can I say? Look at that. Look at that. 88,550. Thank you ever so much, everybody. Is nobody going to call in? It doesn't look like anybody wants to phone me up and be on the show. Oh, well, never mind. If that's the case, I can end the call. I was hoping somebody would want to call in, but never mind. If not, I shall wrap all this up. So let me just tidy up my decks. Get rid of that. Don't need that anymore. I'll go to comments and questions on the screen in a second. Just let me wrap this up. MP Materials looks great today. The acquisition of the rare earths. Everybody noticed that, right? Trump will like that. Old Jensen has just gone into a meeting with Jensen Huang, CEO, NVIDIA, with Donald Trump. That's interesting. Customize. I'm just tidying up my screen so I can wrap up the day. All right. I'm going to... actually, there's no point. I've already done that, so I don't need to do that again. No one's calling in, so I'm going to end there as well. Okay, I'm going to wrap this up. I'm now going to my next event, which is my walk and talk. It's not going to be for an hour or so. So if you want to join me on that, talk about Bitcoin's all-time high today and other stuff, like I got a new pair of shoes today to help me walk. You might like to join me on the walk and talk. Done all of that. Here is the walk and talk. I'll give you the link right now. There you go. There's the walk and talk link. It's pinned to the top. It'll automatically take there anyway. And I think we are good to wrap this up. Let me come back to comments and questions since I did this. Let's have a look. New trainers are good. Yeah. Good evening, Martin. How you doing? Hi, Alex. Lovely to have you here. Yes, Wadey. Next, you'll have an electric chair. Sorry, I'm late. Ayo, how are you? I was party mode. What do you mean you're party mode? Ale, great to have you here. How are you? Is this ale from Italy? Patty and ale, is it? Gracias. Oh, yes, it is. Gracias. No, hang on. Gracias. That's Spanish, isn't it? I'm not sure. So much to learn from your reviews. Thank you, Zach. Am I missing something? No. Yes, guess it's on the S&P. Me, Donda. Sensei did a chart for me with his company 3 months ago on O'Reilly. Great margins and growth. I bet Tim Rogers likes this stock. He buys stuff like this. A solid business long term. Mexico will destroy the shop. We are old school, says Zach Zite. They just had a stock split. Don't know if that matters. No, that's a positive. That's a positive. That's not a bad thing. They've not done a reverse split. If they've done a reverse split, it'd be bad, but a forward split is good. Levi is good beat on EPS, but nothing major. All right, I think that's it. No one's calling in. I gave you a chance. I'm going to turn it off. There you go. Done. Right. We are out of here. My next review is Big Bear review. Yeah. Oh, hello. What we got here?
Uncle Martin, shall we have a cheeky competition to see who reaches the $1 million portfolio first, excluding margin? Lol.
Shall we have a cheeky competition to see who reaches the 1 million portfolio? Yes, let's do it. You won't beat me. Absolutely, 100%. You won't beat me. Where are you now? Where are you now on that challenge? Yeah, where are you now on that challenge? Are you like a grand Are you like a grand away or what? Yeah, yeah. He's like 57 cents. He's going to hit it if it blinks. You wouldn't have asked otherwise. Yeah, that's right. Yeah, I know what you're bloody like. Yeah, I'm very confident in my position, extremely confident. Remember, the moment I feel that the S&P is undervalued, I will buy. I've got 30 grand. That'll earn 3 grand a year minimum. If I buy it on a dip, though, it'll make me 6 grand the first year. And so I'm not worried about the $1 million is easy. The $1 million is easy now. The hard work has been done to get to this level. Now $1 million is going to be easy. Just under you're under 400 grand. You're on 400 grand, so you're double what I am. Well, that doesn't seem a fair challenge, does it? He's got 400 grand and he's racing me to $1 million and I'm basically 251. Bloody hell, mate. What sort of challenge is that? I take it on though, mind you, because it's all about the hair and the tortoise, isn't it? But really, you're literally double where I am. I mean, seriously, you're double where I am. And yet you're challenging me. You're at 400,000. Bloody hell. You're making 40 grand a year just in the S&P doing nothing. I'm at best making 25. So you're doubling your growth just by owning nothing. So just by staying still. So, yeah, that's not really a fair challenge. 999,090. I think it would be a solid competition. Oh, yeah. Yeah, with you double the position. Oh, yeah. Definitely. Definitely definitely fair that. I still take it on, and I'm still going to beat you. But if I was at 400,000, it would be fair. It would be the same, wouldn't it? Or am I getting a handicap? Am I getting a handicap because I'm better? Is that what you're saying? Anyway, that's it from me. I'm going to go. Thank you very much indeed. Tomorrow we'll do some more. Big Bear review tomorrow. I hope you all enjoyed your reviews. That's it from me. We are in members only mode. What I'll do now is I will turn off members only mode, make it open to the public and see who comes in. Here we go. Subscribers, details, members, public. See what happens. Done. Save. There you go. See what happens. And then we can just give everybody an update. There you are. So there's 22 people watching. That's how many members are watching right now. 22. And we'll see what happens. I think it'll be a solid competition, says MSK. I don't know how you come to that conclusion when I am 250, but anyway. We'll give it a moment. I want to see. Welcome, everybody. If you're just coming in now, I can see it going up now. We did a members-only event today. We did 2 reviews. We did Galaxy, GLXY, and Orly, which is O'Reilly. O'Reilly today we did, and that's what we've just been doing. It was a members-only stream. That's why you weren't able to see it. From time to time, we like to do members-only streams and do some special reviews as requested. So we just covered GLXY, Galaxy Digital, and O'Reilly. And O'Reilly has the best chart you've ever seen in your life. So there you go. That's it from me, folks. I'm going to do my walk and talk then in an hour and 15 minutes. I will share with you some private information. In half an hour, I'm having a phone call with the sanctuary in Dallas. Remember I told you about the Tiger Sanctuary that wants me to do a fundraiser for them on the music channel? They are wishing to take on the challenge of getting me to 10,000 subscribers so I can do it. And of course, I'd do it for free. There'll be no fee, no charge, no commission, no nothing. All for free. And they are a registered charity, so it will link to them, and pretty good. Okay? So that's what we are doing. And very, very exciting. So in half an hour, I'm having a call. They've requested to have this with me. They called me, and I'm going to explain to them how it all works. Well, Uncle Martyn, you do love a challenge. I do indeed, and I take it on. I would allow Martyn to use margin. Well, I'm going to use margin anyway, whether he likes it or bloody not, because I'm going to do what's best for the portfolio, best for the show. So I'm not going to not use margin. I'm going to use margin if it's the right thing to do. As can MSK. Anyone can use margin. We can't make the rules. You know, you can't use your tools. You can use all your tools in your armory. So I was literally thinking that. I would allow Martyn to use margin as a handicap. There you go. Well, if I can use margin and you can't, you got no bloody chance. Even if you're 200 grand ahead of me. Did I just write margin? Yes, you did. You did just write margin. All right, there you go. All right, that's it. I'm out of here. So I will see you back in an hour and 15 minutes on my walk and talk. Do join me. It's been an amazing day today. Sensei was live when Bitcoin broke out and became an all-time high at 113,000. Now people accept Bitcoin to be 113,000. Can you friggin' believe it? XRP also. Is that an all-time high as well? I think it is, isn't it? Oh, no, it's not. No, 258. Not quite. Oh, nowhere near. Hang on. Oh, nowhere near. Oh, bloody hell. 329. Oh, nowhere near. Yeah, nowhere near XRP. Anyway, there you go. Not that it's important at all. All right. I can't use margin. Yes. Okay, brilliant. So now it's easy. That is the handicap. No margin for me. Okay, easy. I'll take it on. I could have beaten you without margin. But I'll definitely beat you with margin. That ain't no doubt. No doubt about it. Right, I'm out of here. Thank you very much indeed. I love you all. I'll see you back for my walk and talk in an hour and 15 minutes. XRP doing well today. Not all-time high, though. No, not quite, Mark Lane. Not quite indeed. All right, that's it. I'm out of here. Thank you very much indeed. See you back for then. It'll automatically take you to the whatchamacallit. It'll automatically take you to the walk and talk. I'll see you back in the morning. Deal. We're on. We're on. The first to $1 million. I'm using margin. MSK isn't, but he's got a $220,000 advantage. And he's buying crypto. Which remember, of course, which I'm not doing. I'm only buying the S&P, so I am doing it all on value and timing. He is being able to buy anything he wants. That'll be some challenge, won't it? Indeed, Virgin Galactic is doing very, very well indeed. I would have made $11,000 now if I'd stayed in with that margin. I would be divorced by now, but I would have made $11,000 and it would have been very interesting. There it is. Yeah, no doubt about it. All right, no doubt about it. I'm out of here. Thank you very much indeed. Either way, I'm happy. Whoever wins, Uncle Martyn. Yeah, exactly. Whoever wins, it don't matter. But it'll be a lot of fun. That's it from me. Thank you very much indeed. I will see you back for the walk and talk. Until then, as always, take care of yourselves. Hang on. What's the prize for winning? What's the prize for winning? $1 million. $1 million. It's the journey, not the target. It's the journey we go on. It's a very green time. It is indeed. Right, can I get out of here? That's it from me. Until next time, see you on the walk and talk in an hour and 13 minutes from now. Until then, I'm talking tigers with the Tiger Sanctuary, trying to help them out as well. Anybody else want any help? I'll see you back in a bit. Take care of yourselves and each other.